Welcome back to the Deep Dive. You know we love a challenge, and that's exactly what you've given us.
That's that right.
You bet. You've sent us a ton of research on Broadcom ticker symbol AVGO, and you want to know, is this a good fit for your portfolio?
Straight to the point, and a perfect topic for a deep dive.
Absolutely. So let's get right to it. Broadcom, they're a big player in the world of semiconductors, right? All those tiny chips that power our devices.
Yeah, they're definitely a force in that space.
But here's what I find fascinating. They also have a growing software business. Almost 80% of their revenue comes from semiconductor products, but the rest comes from software.
You're right, it's that mix that makes them so intriguing. And when you look closer, one of the first things that jumps out is their economic moat. Particularly strong in chip design and the switching costs associated with their software.
Okay, break that down for me a bit. What exactly does a moat mean in this context?
Think of it as a competitive advantage, something that makes it difficult for rivals to just come in and steal their market share.
Ah, I see. So it's like a protective barrier.
Exactly. And in Broadcom's case, their moat comes from those intangible assets like expertise in chip design. And for their software, it's hard for customers to switch once they're locked in.
Makes sense. So strong competitive advantage, that's a good thing for potential investors.
Absolutely. And it gets even more interesting when you look at how much they've grown.
Well, let's talk numbers. Broadcom is currently the world's 11th most valuable company.
Not too shabby.
No kidding. Market cap of $757 billion, folks. And remember, back in 2009, they were at just $4.3 billion. Talk about a glow up.
Wow, that's some serious growth. And in 2023 alone, they pulled in $35.82 billion in revenue. A big chunk of that growth is fueled by their acquisitions, wouldn't you say?
They've definitely been busy on that front.
Especially with the recent purchase of VMware.
Oh, yeah, can't forget that. That was a mega deal.
Mega's right. $69 billion, making it one of the biggest tech acquisitions ever.
So now they've got an even stronger foothold in cloud computing and virtualization. That's a huge market.
It is, but it's not as simple as it sounds.
Oh, how so?
Integrating a company as big as VMware, that comes with its own set of complexities and potential risks, too.
Interesting. So it's not all sunshine and roses.
Not necessarily. There's always a flip side to consider. But hey, that's what makes this deep dive so fascinating, right?
Definitely. We need to weigh those pros and cons. So give it to me straight. What are the AVGO bulls saying? Why are they so excited about Broadcom?
Well, they point to the company's efficiency and strong cash flow. And those customer relationships, let me tell you, they're impressive. We're talking big names like Apple, Alphabet, Google's parent company, Cisco Systems.
Well, it's a powerful lineup. But what about the other side of the coin, the AVGO bears? What are their concerns?
Right. Some folks worry that Broadcom relies too heavily on acquisitions for growth. They question whether that strategy can last long term.
Okay, I see their point.
And then there's the whole cyclical nature of the semiconductor industry. Ups and downs,
Yeah, those market cycles can be tricky.
They can. And while Broadcom's software business helps balance things out a bit, there's still some vulnerability there. They're not completely immune to market downturns.
Okay, so we've got these bulls excited about the growth potential and these bears a bit more cautious.
Yeah.
What should our listener be thinking about as they consider adding Broadcom to their own portfolio?
Well, that's where things get really personal, right? It all boils down to individual investment goals and risk tolerance.
Of course.
So let's break down some key factors here. Let's talk about Broadcom's dividend policy. What about their approach to share buybacks? And then there's the whole ESG landscape. How are they handling those factors?
All right, let's dive in. First up, dividends. I know Broadcom is known for being pretty generous with their payout.
Oh, they definitely don't skimp on the dividends. They've actually committed to paying out 50% of their prior year's free cash flow directly to shareholders.
Wow, that's a pretty significant chunk.
It is. And that's why it's so attractive to investors who are looking for that steady income stream from their investments. Those reliable checks coming in.
Yeah, that makes sense. But can they really keep up with those payments? Especially after taking on all that debt for the VMware acquisition.
That's the million-dollar question, isn't it? And they've acknowledged the need to balance that dividend policy with, the responsible thing, paying down that debt.
Right. Got to keep things in check.
Exactly. But here's the thing. Their cash flow is pretty darn strong.
How strong are we talking?
Well, over the past 5 years, they've averaged a whopping $14 billion in free cash flow each year. That gives them some wiggle room, right? And with VMware now part of the picture, they're projecting even higher cash flow down the road.
Okay, so their dividend policy seems pretty solid, even with the debt. But what about share buybacks? Are they active in buying back their own stock?
They do have a history of share buybacks, which, as you know, can be a good way for companies to return value to their shareholders and potentially boost that stock price too. But right now, their focus is definitely on managing that debt from the VMware acquisition.
Yeah, that seems like the priority at the moment.
It is. So those share buybacks might take a bit of a back seat for now. Makes sense. They need to be financially responsible. So next up, how about we talk about those ESG factors? How does Broadcom measure up when it comes to those environmental, social, and governance practices?
Yeah, ESG is a big deal these days. Investors are really paying attention to that stuff.
They are, and for good reason. But with Broadcom, it's a bit of a mixed bag. Like a lot of companies out there, they are taking steps in the right direction, like working to reduce their environmental impact. And they've implemented some diversity and inclusion programs, which is great.
Sounds like they're making some effort.
They are, but there's always room for improvement, right? Like some concerns have been raised about their supply chain practices, and there's room to grow when it comes to board diversity.
Got it. So making progress, but more work to be done. Now, let's talk valuation. This is always a crucial question. Is Broadcom a steal? Are they overpriced? Or somewhere in between?
The age-old question. Well, according to Morningstar's estimates, their fair value is around $155 per share.
And what does that tell us?
Well, it indicates that right now they might actually be fairly valued, but that's just one perspective.
Okay, so other analysts might see it differently.
Exactly. I mean, there are analysts out there with price targets way above $200. That's a pretty significant potential upside.
Wow, quite a range there. But like you said earlier, valuation is just one piece of the puzzle. It's important to look at the whole picture, right? Their financials, their growth opportunities, any red flags, their dividend policy, their commitment to ESG.
Absolutely. You have to connect all the dots.
Right. So far, it sounds like Broadcom has a lot going for it. Strong position in the market, those impressive financials, and their dedication to rewarding shareholders.
No doubt they've got a lot of strength. But they're not without their challenges either. I mean, integrating a massive acquisition like VMware, that's a big one. And they've got that debt to manage.
True.
Plus, they're operating in a fast-paced industry. Things are changing constantly. They have to stay agile and adapt.
So much to think about. We've really gone deep on Broadcom today. Their financials, their growth, those potential risks. Where does all of this leave our listener? What's the takeaway?
Well, that's where you, the investor, have to step up and make the call. Does Broadcom fit into your strategy? We've laid out all the pieces of the puzzle, but only you can decide how they fit together for you.
That's a good point. It's all about individual goals. But it's been a fascinating journey, wouldn't you say? We started with their unique position in the market. Semiconductors, A&D software, that's pretty rare.
Yeah, a powerful combo. And then there's their financial performance. I mean, those numbers are impressive.
No doubt about it. And of course, we couldn't ignore that mega VMware acquisition. What a game changer.
Definitely shook things up. We also talked about their commitment to those juicy dividends and how they're tackling those ESG issues, making progress, but still some work to do.
A lot to unpack. But hopefully our listener feels well equipped to make an informed decision. I know I've learned a lot.
Me too. It's always a good reminder that the tech world never stands still. Broadcom's making big moves, acquisitions, new markets, cutting-edge tech. It's exciting.
It is. And we as investors need to keep pace, right? Stay informed and be ready to adapt. That's what this deep dive is all about.
Absolutely, giving you the tools to navigate this complex world. No easy answers, just good information and different perspectives.
Exactly. So to our listener, we encourage you to keep digging. Do your research, explore those different viewpoints, and ultimately make the choice that feels right for you.
Couldn't have said it better myself. Anyway, thanks for joining us on this deep dive. We'll be back soon with another fascinating company and another deep dive into the world of investing. Until then, happy investing.